how stocks are made for day traders to lose and long-term investors to win. Ladies and gentlemen, I was on earlier. I had a little mishap, had to come back on with my microphone or whatever. So hopefully y'all can hear me for the people that do catch this live. Now, in this video, I'm going to talk about this video in this podcast. I'm going to talk about how stocks are made for day traders to lose and long-term investors to win. I'm going to give you 3 examples. All right. But if you're catching this live, definitely stick around and drop some comments and join the conversation. But ladies and gentlemen, if you haven't done so already, go ahead and make sure. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, Prince Dykes, coming all the way live from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So we're going to jump straight into it. How is the stock market built for day traders to lose? Now, ladies and gentlemen, this is not a way to bash day traders. This is just to make people aware of what you are up against. Like they always say, especially in a book that's pretty popular, 48 Laws of Power, always know what you're going up against. Always be aware of what's on the other side of the fence. So this is what this video is about. So I know people are lured in by day trading because it's quick, it's fast, I can sit at home, all these type of things like that. But you have to know what you're up against. What are you on the other side? What are you on the other side for? All right. So the first thing is monetary policies. What are monetary policies? We saw monetary policies in full effect last year when the pandemic started to break out. Monetary policies, our Fed chair currently is Jerome Powell. Monetary policies are policies that are put in place by the Feds that they can do to manipulate money and put money into the market and take money out of it. Now, Prince, what does this have to do with a day trader versus a long-term investor? As a day trader, monetary policies, I haven't seen one monetary policy that was like, hey, we have to do something because people lost a bunch of money on AMC yesterday, or we have to do something because people lost money on whatever, GameStop yesterday. But they do that when they see the entire stock market start to fall to the floor like we saw during the pandemic. Prince, how do they do that? What do you mean? Here's one. Remember these interest rates? Who remember interest rates? When they said, hey, we're going to lower interest rates are going to go all the way down to a low 0.25%. What does lower interest rates mean? Lower interest rates mean money is easy to borrow, making houses cheaper to buy, making money cheaper to borrow, making people go out and entice people to borrow money and go and spend it, putting more money into the economy. That is a monetary policy that the Federal Reserve did that, guess what? To help boost up the economy. Now we see stock markets are completely rebound and higher than they were before. And we're seeing a roaring real estate market. Great win for the long-term investor. But what about the day trader? Something to think about. The second thing is QE, quantitative easing, QE. People thought about QE when they say quantitative easing. This pretty much means we're just going to pump money into the, you know what? We're just going to go out and buy stocks to push the stock market higher, to increase liquidity to the market. We're just going to continue to buy stocks. Oh, the liquidity is low. What do they mean by the liquidity is low? Liquidity means a volume is low. Not that many people are buying and selling stocks. Guess what? Here comes the Federal Reserve. We can just turn on our money machine, print up some money, and then we're going to shoot money out into the market. Quantitative easing is another one, is another monetary policy that benefits long-term investors, but not so much of the average day trader. What's in it for the average day trader? All right. Number 2, we talked about monetary policies. Now let's get into fiscal policies. Don't worry about it. We're going to discuss what fiscal policies are too. Now, fiscal policies are policies that are put in place by Congress, right? This is when Congress steps in and they see the economy is going crazy. What can the not for the federal government, what can the Congress do? They can write fiscal policies, get them signed by the president. Number 1, what did we see last year? Everybody's complaining about now those stimulus checks. Remember those stimulus checks and those unemployment checks and those PPP loans? Those are fiscal policies and things like that the government put out there to help out people, to help boost the economy. Great for the long-term investor. What about the average everyday day trader? So right there, oh my God, stock market is going down. People are losing their 401ks. Let's jump into our monetary policies. Dun, 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 everybody put on their cape. The Federal Reserve puts on their cape. Then here comes the federal government, not the federal government, but Congress with their fiscal policies to help stimulate the economy by just giving people money, right? Well, we're not going to get into another number, but another way they can do that is taxes. Taxes. So for prime example, if you're a long-term investor, you hold stocks for 2 years, I decide to go in and finally sell my Apple stock. And guess what? I made $5,000, or I made $1,000, or if I made $5, guess what? My taxes are lower versus if I did it if I day traded, if I brought it at 8 o'clock and sold it at 10 o'clock and I made $10,000, guess what? Higher taxes. Short-term capital gains tax versus long-term capital gain tax. That is a way that the long-term investor is set to win. Also, let's say if I have an IUL, some type of cash value life insurance policy that follows stocks, or if I have a 401k, an IRA, something like that, or whatever, those are tax shelters. They're all type of tax shelters for the long-term investor. But what about the short-term person? I brought it at 8 o'clock and sold it at 12. What tax breaks can I get? Something to think about. Number 3, we're going to get into, you have what they call Big Brother, who's looking over everything. The SEC, Security and Exchange Commission. Prince, what does Security and Exchange Commission mean? The Security and Exchange Commission, I keep telling people this all the time, they're slowly moving in a way to, as Bitcoin goes mainstream and as Bitcoin becomes mainstream and has success, you're going to see the Security and Exchange Commission step in and probably find a way to regulate it. That's just the way it is. Remember GameStop when everybody said, whoa, we short squeezed all and we broke Wall Street. These people made all this money on GameStop and the people make all this money on AMC. Then out of the blue, we started seeing all these reports. You can no longer buy GameStop. You can no longer buy AMC. You only could buy so much of GameStop. You only could buy so much of not SEC, but AMC. Why is that? Who did that? There you go. You have the SEC, Security and Exchange Commission, whose entire job is to protect the public from Ponzi schemes and things like that, right? I know people always criticize it and say America is the biggest Ponzi scheme in the world. It's not my job to say where it is, but you have regulators in place. So you have regulators in place to stop day traders. So day traders, if you do get in there and, hey, you're short squeezing people, and you've seen it with AMC, you've seen it with GameStop. What did they do? Here comes the SEC to freeze, halt trading, all these type of things, right? You even see it in the cryptocurrency world. They're busting up cryptocurrency companies all over the place. Coins that are created, here comes the SEC to shut them down left and right, looking at them left and right, all these type of things, right? Those are the tools. So guess what? You have the SEC that is in the pocket of the long-term investor. Oh, guess what? You brought a stock and they lied on their financial report. Here you go. You get money for damages. If you're a day trader and you got bad information and you brought it at 8 o'clock and you short sold it at 10 o'clock and you lost all your money, the SEC doesn't care, right? But the long-term investor, if I go in and I do my analysis and couldn't find out that Enron was cooking the books, y'all remember Enron? Enron was cooking the books. Guess what? The SEC steps in and it protects the long-term investor, making them the winners over time. So there you have it, ladies and gentlemen. Those are my 3 things right there. You have monetary policies that are backing up the long-term investor. You have physical policies that are backing up the long-term investor. And you have the SEC that's backing up the long-term investor. The SEC, you got monetary policies. They're running around with interest rates, and they have quantitative easing. You have physical policies that are putting out stimulus checks and also giving tax breaks to people who have their money over time. For prime example, you can say what you want to say what you feel about it, but the 2 major crashes I've seen in my lifetime is 2008 and 2020, the pandemic and the housing market bubble crash. When you saw these 2 things happen, you go from 2008 to 2020, you look at the market now, the long-term person who just stayed there and consistently brought, they won. But if you're a day trader, I didn't even get a chance to touch into institutional traders. When the institutions comes in and manipulate the market because they got high frequency trading and they're buying 10,000, they're buying blocks of stocks here and there, left and right. You, the little guy who's sitting at home on his couch with his laptop, what do you have to hedge that? Who's helping you out there? Something to think about. Those are my 3 reasons. But anyway, ladies and gentlemen, my name is Prince Dykes. This is the Investor Show. Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe, peace, be safe. I'm out, and thank you.